All right, let's jump right in. Today we're looking at the absolutely wild ride of a stock that's got a lot of people talking, Athena Bitcoin Global. You'll know it as ticker ABIT. And wow, is this a story of dizzying highs and some pretty devastating lows, all happening in just a few short weeks? So get this. Imagine a stock loses nearly half its value, and then, out of nowhere, it rockets up over 100% in just a couple of days. The big question on everyone's mind is, what on earth is happening here? And, more importantly, where could it possibly go from here?
Okay, let's just walk through this timeline for a second to really see the chaos. Back in July, ABIT was just kind of hanging out around 6 cents. Then, the floor completely fell out. It crashed all the way down to just over a penny by the end of September. But just when it looked like it was game over, boom, October 3rd, it spikes to nearly 4 cents before settling back down to where it is today. I mean, this isn't just volatility. This is a pure roller coaster.
Now, even with that really exciting recent spike, we have to pull back and look at the bigger picture. And when we zoom out, well, a much more cautious story starts to emerge. There are some really powerful, long-term forces at play that suggest this rally might not have legs.
So here's what the bears are seeing. Even with that huge jump, the stock is still down over 40% in just 3 months, and it's trading way, way below its key long-term average. The data just shows that over time, more people have been selling this thing than buying it, and that is a really tough headwind to fight against.
And this slide really puts that problem into perspective. Think of the 200-day moving average as the stock's long-term center of gravity. That's up there at almost 5 cents. Meanwhile, the current price is all the way down at 3 cents, kind of dangling far below. So for this stock to truly recover, it doesn't just need a little jump, it has to close this massive gap.
And we can confirm this with another tool, something called linear regression. All that really is a statistical method that draws the line of best fit for the stock's price over time. And for ABIT, that line isn't just pointing down a little bit, it's on a steady, determined march lower.
Now, this is pretty shocking. Based on that downward trend line we just talked about, the stock should be trading at just over a penny. So the fact that it's currently over 200% above that prediction, that's a huge statistical anomaly. It suggests this recent price spike is an extreme outlier that is very likely to get pulled back down toward that trend.
But wait, that's only half the story. Let's completely pivot and look at the other side of this fight, the sudden, absolutely explosive buying that actually caused this rally. What in the world could be driving this incredible short-term strength? Well, the answer is right here. It's volume. On October 3rd, nearly 2.9 million shares of this thing were traded. Now, that's not just a little bump. It completely dwarfs the average daily volume. And this tells us something really important, that recent price surge wasn't some fluke. It was powered by a massive, undeniable wave of buying interest.
And all that volume has led to some pretty impressive short-term signals. You've got that 100+% rally, and the price is now floating comfortably above all of its short-term trend lines. The 5-day, the 50-day averages. So from this point of view, the bulls have every reason to be excited. The momentum is, for now at least, clearly on their side.
Okay, so what do we have? A powerful long-term downtrend is clashing head-on with a massive short-term uptrend. This is where things get really, really complicated. It's a technical tug-of-war, and the indicators are basically shouting opposite messages at us.
So before we look at the next bit of data, here's a real quick primer. The Relative Strength Index, or RSI, is a tool a lot of traders use. The easiest way to think about it is like a speedometer for the stock's momentum. It tells you if the price has been moving up or down too quickly, which can be a sign that a reversal is right around the corner. Right now, ABIT's RSI is sitting at 74.49, and here's the key. Anything over 70 is considered overbought. This is basically the indicator flashing a big warning light, suggesting the recent rally has gone too far, too fast, and might be totally running out of steam. And here's another warning sign. Imagine a river that almost always flows within its banks. Well, Bollinger Bands are kind of like those river banks for a stock. They show the normal, expected range of its price swings. ABIT's price has surged so powerfully that it's now flowing way outside of those banks. That's an extreme condition that, more often than not, leads to the price pulling back into its normal range. This table just perfectly summarizes the confusion we're seeing. You have momentum indicators like the RSI screaming that the rally's overextended. Then you have trend indicators giving it a weak, kind of non-committal thumbs up. And maybe most important of all, the volume indicator shows what's called a bearish divergence. That just means the price is rising, but the volume behind it is actually weakening. That suggests this rally doesn't have the deep, long-term support it really needs. It's just a complete mess of conflicting data.
So, with this crazy, technical tug-of-war going on, where could the stock possibly go from here? Well, the analysis really points to 3 potential scenarios playing out in the near future.
So path number 1, and the most probable according to the indicators, is a pullback. That's where the stock cools off and falls back towards some key support levels. The super bullish path would require it to defy the odds and actually break through its recent high. Or we could just see a stalemate, where it trades sideways for a while as the bulls and bears just fight to a draw.
I think this quote from the source analysis just captures the whole situation perfectly. It's not a clear bull market, it's not a clear bear market. It's a short-term burst of excitement that's happening inside of a much larger, much more pessimistic story.
And all of this leads to the final verdict from the automated analysis. It's not a buy, it's not a sell, it's a hold, but, and this is the important part, with very low confidence. So the main takeaway here isn't really a prediction, it's a warning. The level of uncertainty is incredibly high, and extreme caution is probably the smartest move.
And that really leaves us with this final question to chew on. When the long-term story and the short-term story are telling you 2 completely different things, and every technical indicator seems to contradict the next one, is stepping back and just being cautious the only truly logical play? It's a fascinating puzzle for anyone watching the markets. Thanks for tuning in.